Hello and welcome to another edition of Stockwatch. So as we get into the middle of the trading week, the main topic of everyone's lips was Netflix earnings season yesterday after they actually missed their earnings per share estimation. So even though revenue and subscriber numbers were up, the expectancy of the earnings per share was slightly down. So here are the numbers then. Earnings per share was at $2.97 versus $3.16. Revenue was up at 7 billion 34 against 7 billion 32, and global paid net subscriber additions were up at 154 against 1 million 19. So analysts weren't expecting a big blockbuster epic quarter with subscriber numbers or revenue numbers, so it didn't really weigh in too much on the stock price because of this, because it was an expectancy. The company did actually confirm it was going into the world of gaming to try and get another profitability somewhere. Obviously gaming has taken off quite significantly in the last 10 years, so I guess Netflix wants a piece of this pie, but they didn't say. They said that they won't be relying on these features alone for gaming, for the gaming industry, and it will still maintain its focus on the core streaming service that it has actually made its money on. So the last time I looked on Netflix, we saw this down trend line that we broke out of, but now we are hovering quite precariously again to try and break out of it. So this is quite a stern test, a stern resistance for Netflix, roughly about the 530 psychological level as well. So we are trading above the Ichimoku cloud, which is quite significant. So we can get a bit, the impetus is on the upside after just touching it here. As you can see, I'll just zoom in for slightly better focus. Nothing too much on the RSI. It's going as it probably would do if if we get a bit more downside momentum here, then we could ask for a bullish scenario here to break us back over this trend line and to start getting us to recent peaks. However, this looks like a long way away at the moment. It looks like prices were already, the news was already priced in. So let's just look at the 4-hour chart. And again, just looking to see what the opportunities are. We are hovering above this, as I said, this trend line here. This will be very important. The cloud is kind of growing onto the upside, which means there could be quite a lot of resistance to have another attempt to the upside. If there isn't that attempt, then a nice sell position could come into fruition, and then we can look at these previous lows here. So that's what I'll be looking at in the next few trading sessions. And I just want to take a look on Disney Plus, because a story broke yesterday about their big box office winner, let's say, which was Black Widow, but it actually plummeted over 70% in its second week. So this drove prices down quite significantly, as it was, this movie was to be quite a big hit for Disney Plus, but it has turned out to be not a flop, but it has not made the money that Disney Plus was hoping for. And obviously Disney Plus does not get all the profits from movies. They have to actually, there are overheads and other costs that they have to take into consideration. So at the moment, Disney Plus not looking too good in the way of share price because of that. But let's just take a look on the 4-hour chart just to get a better perspective. And as you can see, we've got this dip here. There could be a slight reversal if we can get above this period here, roughly about the $180, $179 range. Again, nothing too much in the way of of divergences on the other side. There was an almost bullish divergence if this would have dropped even further, but as you can see, it did not. So we are just looking to see if it's going to move, go into a sideways pattern at the moment. The Ichimoku cloud is quite thin as well, so this means that we could see a bit of a breakout shortly. But which way will it go? Well, if it does go below these lines, these levels, so I'll be looking at the mid 160 range. And on the flip side of that coin, if it does break above and fill this previous gap that we saw, then there's no reason why we can't get up to the mid $180 range. So $20 range there at the moment. Sorry for my bad handwriting. So this is going to look at the next few trading sessions as we go into the back end of the trading week. So something to look out for on the streaming giants. That's all from the Stock Watch today. Once again, thank you very much for joining me. If you have any comments or queries, please feel free to add them to the post and I'll get back to you as soon as possible. Have a great trading day ahead and bye for now.